This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC will welcome Iran's full return to the oil market when sanctions are lifted. The Secretary-General of the Organization of the Petroleum Exporting Countries, OPEC, told the Iranian Oil Ministry's website Shana on Monday. Iran is an OPEC member, although its oil exports are subject to U.S. sanctions aimed at curbing Tehran's nuclear program. Secretary-General Haytham al-Ghais, who is visiting Tehran for the first time, added that Iran has the capacity to bring on significant production volumes within a short period of time.
Oil prices rose on Tuesday as the expectations the debt ceiling deal in U.S., the world's biggest oil user, will spur more demand, but fears of further interest rate rises and that OPEC Plus will leave output quotas unchanged capped gains. Brent crude futures climbed 35 cents, or 0.5%, to $77.42 a barrel by 0145 GMT after gaining 12 cents on Monday. U.S. West Texas Intermediate, WTI, crude rose 53 cents to $73.20 a barrel, up 0.7% from Friday's close. There was no settlement on Monday because of a U.S. public holiday.
Moving on to the top news in the energy sector.
Leading crude exporter Saudi Arabia is maximizing refining profits by importing unprecedented amounts of cheap Russian diesel and in turn shipping record volumes to Singapore, where the fuel can achieve higher margins, ship tracking data shows. Russia has had to divert the volumes it sold to Europe, previously its dominant product market, after the European Union banned oil product imports in February as part of its response to Moscow's invasion of Ukraine. That allowed state oil giant Saudi Aramco to increase its May import arrivals to Singapore to record levels and cash in on better arbitrage netbacks in the East than Europe, driven by tighter Asian supply during the maintenance season, traders and analysts said.
Bangladesh is seeking 95-octane gasoline, gas oil with 0.005% sulfur content and marine fuel with 0.5% sulfur content for the July to December period, the Bangladesh Petroleum Corp, BPC, said in a tender notice on its website on Monday. The country is seeking 60,000 to 80,000 tons of the higher 95-octane grade of gasoline, 1.1 to 1.2 million tons of gas oil and 30,000 tons of marine fuel for the period, BPC said. The mode of payment will be through letter of credit and the tender is valid until August 6. BPC controls the import and marketing of petroleum products in the South Asian country.
Next, we have the top news in metal markets.
Indonesia, the world's top nickel producer, has put on hold plans to tax nickel product exports while it works on creating a price index to ease volatility tied to the London Metal Exchange, LME, benchmark, a senior government official said on Tuesday. The government plans to launch a nickel price index by the end of 2023 and needs it to be in place before going ahead with an export levy. Septon Hario Setu, a senior official with the Investment Coordinating Ministry, told the SMM Indonesia Nickel Cobalt Conference in Jakarta. The index could be used to calculate royalties and any export levy, Septon said.
China's April net gold imports via Hong Kong rose to the highest in 2 months. Hong Kong Census and Statistics Department data showed on Monday. Net imports into the world's top gold consumer rose to 49.906 tons in April, the highest since February, and compares with 47.527 tons in March, the data showed. Total gold imports via Hong Kong were up 4.4% at 53.581 tons, after declining in March. The central bank most likely continued to diversify its forex reserves into gold, said UBS analyst Giovanni Stanovo. We will now look at the top news in the agricultural sector. Export prices of Russian wheat are softening further in anticipation of a new harvest and amid low demand from global importers, analysts said. A deal to allow Ukraine to export its grain safely across the Black Sea was extended last week for 2 months. The prices of Russia's new wheat crop with 12.5% protein content, delivered free on board, FOB, from the Black Sea, was assessed at $230 a ton compared to $242 a ton from the previous week for the old crop, the IKAR Agriculture Consultancy said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.